Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by Notebook LM AI, this series brings you clear, meaningful insights into finance and beyond.
Today, we're diving deep into the story of one of Silicon Valley's most influential and provocative venture firms, Founders Fund. Inspired by Mario Gabriele's insightful article published in the Generalist, we'll explore how this unconventional firm, led by visionaries like Peter Thiel, has shaken up the venture capital world by consistently betting big on transformative, sometimes controversial technologies.
Okay, let's dive in. Today, we're taking a deep dive into one of Silicon Valley's most impactful and often debated venture capital firms, Founders Fund. And of course, the central figure behind it, Peter Thiel.
Absolutely. And look, this exploration isn't just, rehatching public knowledge. Our analysis is really grounded in some pretty extensive research.
Right.
We're talking interviews, a close look at detailed fund materials, analysis of performance data that wasn't previously out there. It's all based on a deep study, took over a year, focused just on the firm.
So our mission here is to help you cut through maybe some of the noise, the mythology, and really pull out the key insights from this incredibly detailed material. How did Founders Fund actually climb to the top of the valley? What was this unique philosophy that really set their course?
It's a genuinely fascinating story. I mean, we're going to uncover details about figures you probably know well, but also these power brokers who tend to stay more behind the scenes. And the performance numbers revealed, they're actually quite surprising in some ways. And the personal dynamics right at the beginning, at the firm's founding, really intriguing stuff. It's a story that weaves together, philosophy, tech vision, even a bit of spite, actually.
Some might. Okay, we'll have to get to that.
Oh, yeah. Alongside incredible foresight and obviously some spectacular financial wins.
So where do we even start with someone as, influential as Peter Thiel? The research describes him as someone who seems to see many moves ahead, almost like a chess master.
Yeah, and the material uses this really powerful image to illustrate that influence. It's about his absence, strangely enough.
How so?
Think about January 2024. The research points out Thiel wasn't physically at the inauguration, but his people, his former employees, close associates, connections, they were basically everywhere, deeply embedded in the power centers.
Right. I remember that part of the analysis. His former chief of staff as VP, a former colleague from the Stanford Review days, appointed as a key advisor on AI and crypto.
Exactly. Then one of his very first angel investments running Meta and, the founder of Tesla and SpaceX.
It really highlights this almost uncanny ability he seems to have, positioning key people across these critical sectors, New York finance, Silicon Valley tech, even the Washington military-industrial complex.
And his style.
Yeah, the communication style. The research calls it this, complex mix, super discreet sometimes, but then surprisingly blunt or even provocative other times.
Right. He might vanish, then pop up with some sharp critique or an unexpected investment, maybe even a pretty pointed vendetta.
And that foresight you mentioned. The material shows it often looks like a mistake at first, doesn't it?
Totally. It looks like a blunder initially, but then time sort of proves him right. It's a pattern.
And crucially, this deep analysis places Founders Fund right at the heart of that network, that power, that unique influence Thiel has built up.
It's central.
So that brings us to the firm itself. What about its image? How does the research describe Founders Fund's public face?
It talks about this deliberate, polarizing piratical image. It's quite a phrase.
Piratical.
Yeah, like the Oakland Raiders or those late 80s bad boy Pistons basketball teams. But, with this intellectual layer on top, they clearly weren't trying to just blend in.
Okay, so they cultivated this edgy image. But did the performance actually back it up?
Yeah.
What does the data say?
Oh, it absolutely does. The material lays out specific, frankly, eye-watering numbers. They manage billions now, right?
Right.
A huge leap from that first $50 million fund.
Wow.
And their success, according to this research, wasn't from just spraying money around. It came from really concentrated bets on companies that became absolute giants. We're talking SpaceX, Bitcoin, Palantir, Endural, Stripe, Facebook, Airbnb. These created what the analysis calls hit vintages.
Hit vintages. And I think the research highlighted a couple of those funds as being particularly exceptional, even for VC standards.
Yeah, exactly. The 2007-2011 funds are called out specifically as among the best ever vintages. That 2007 fund started at $227 million. It generated a gross multiple of 26.5x.
26.5 times.
Yeah, I mean, for every dollar invested, it returned $26.50 before fees. Just incredible. And then the 2011 fund, which was actually split into two vehicles, $250 million and $625 million. They returned 15.2x and 15x gross multiples. Really, truly exceptional results in the venture world.
Those numbers are just staggering. So what does this analysis pinpoint as the key, the core reason for that kind of, outlier success? What's the underlying philosophy?
The research really hones in on this idea. It calls the firm's fundamental genius as wanting differently.
Wanting differently.
Yeah. It contrasts this with the broader venture capital world, which it says often suffers from posturing and mimesis. Basically, everyone trying to look the same, act the same, chase the same hot trends.
Like herd mentality.
Exactly. Founders Fund, the argument goes, succeeded because it directed its desires, its focus, uncommonly. It took positions that often seemed weird or counterintuitive, or even just plain wrong to most other people at the time.
And that willingness to be contrarian, that wanting differently, that's positioned as the real key differentiator.
Precisely. It was about having a genuinely independent viewpoint and, crucially, the conviction to actually back it with money, even when it flew right in the face of conventional VC wisdom.
Okay, so sticking with the origins, the research goes into how Thiel actually put together the core team. There's this really interesting line in the material, something like meeting him could be almost dangerous to spend too much time in his company. What's that about?
It's a striking phrase, isn't it? It uses this comparison to Talleyrand, the 19th century French diplomat.
Okay.
Who was known for this captivating conversation, this paralyzing smile. The research suggests Thiel had a similar kind of effect, that a chance encounter with him could just fundamentally shift your life's path, make you move across the country, ditch a prestigious career plan, and just commit to working with him.
And Ken Howery is kind of the poster child for this effect.
He really is. The research tells the story. Howery was an undergrad at Stanford, economics major, working on the Stanford Review. The conservative paper Thiel had co-founded years before. Howery eventually became editor himself.
And they met at an alumni event.
That's right, which led to this 4-hour dinner. Howery apparently recalled being just super impressed by the breadth and depth of his knowledge. Thiel talking about everything, politics, philosophy, startups.
And then came the offer.
Right at the end of the dinner, Thiel offers him a job. First employee at Thiel Capital, his tiny hedge fund. It only had, $4 million under management then. And Howery, at that point, was all set to take this traditional, well-paying banking job at ING Barings in New York.
So he asked around for advice, right?
He did. Asked everyone, friends, family, mentors, what should I do? And according to Howery himself, 100% of them told me to take the bank job. Every single one.
Wow, but he didn't.
He didn't. He spent a couple of weeks thinking it over and then, as he put it, decided to ignore their advice and do the non-obvious thing. It was clearly a huge turning point.
Yeah.
He even told his girlfriend that night, apparently with amazing foresight, I think I might work with this guy for the rest of my career.
Incredible. Okay, so Howery's in. How did Luke Nosek join this early circle?
So Howery met him. Thiel was giving a talk on Stanford's campus, and Nosek apparently leaned over to Howery, asked if he was talking to Peter Thiel, and then just introduced himself as entrepreneur. Handed over a business card that said the same thing. Added, I build companies.
But the really interesting part of that story, as the research points out, is that Nosek was building a company Thiel had already invested in.
Right. Smart calendar. It raises this kind of puzzling question that the research digs into a bit. How did Nosek not clearly remember meeting one of his earliest investors, someone he'd apparently even had breakfast with before? The material speculates, maybe it had just been a while. Maybe Nosek was just kind of an eccentric founder type. Or maybe, just maybe, Thiel was briefly forgettable back then, though that seems less likely given everything else we know.
Hard to imagine now. But regardless, Thiel obviously saw something significant in Nosek. So just one detail from that first proper meeting.
Oh yeah, the cryonics thing. Nosek mentioned he'd arranged to be cryonically preserved after death. And the research explains that Thiel saw this as embodying a specific talent archetype he really valued.
Which was?
This blend of cerebral horsepower, intellectual liberty, and disregard for social mollification. Basically, being super smart, thinking freely, and not really caring what others thought, it mirrored aspects of Thiel's own personality.
And it was influential on Thiel too, right?
Apparently so. It's maybe telling that Thiel himself later also arranged for cryonic preservation.
So these three, Thiel, Howery, Nosek, they're connected by mid-1998. starting this deeper collaboration that would eventually lead to Founders Fund, even though the fund itself wouldn't launch for another, 7 years?
2005.
Yeah, their paths were already deeply intertwined long before the fund became a formal thing.
Okay, which brings us to this very specific framing the research uses to understand the origin story. The Spite store. You mentioned Spite earlier.
Yes, the Spite story. It borrows the term from Curb Your Enthusiasm, the TV show.
Right, Latte Larry's. Exactly. A spite store is a business you start basically just to get revenge on a rival by competing directly with them.
And the research makes the case that Founders Fund, at least on one level, can be seen as Peter Thiel's Spite store aimed squarely at Michael Moritz of Sequoia Capital.
Moritz, yeah. An absolute legend in VC, obviously. Backed Google, Yahoo, LinkedIn, huge names. And the research really details how he and Thiel clashed a lot, especially during those intense early PayPal years.
Okay, so let's connect the dots. How does the PayPal story feed into this rivalry?
Well, remember, Thiel, Max Levchin, Howery, and others started Confinity, super talent-rich group. They merged with Elon Musk's X.com to become PayPal. Moritz was an investor in X.com, so boom, he's on the board, a major player after the merger.
And the clashes didn't take long to start.
Nope. The research points to a really key one in mid-2000. PayPal had just raised $100 million. Thiel, seeing the dot-com crash coming, proposed using some of that cash to short the market via his hedge fund.
And Moritz's reaction?
Described as apoplectic, just furious, saw it as gambling with the company's money. He basically told the board, if you approve that, I'm resigning.
Wow.
And the analysis draws this really sharp contrast between them, calling it Moritz's desire to do right and Thiel's to be right. Kind of sums up their different worldviews, maybe.
And looking back, who was right about the market direction?
Thiel was completely right. The tech bubble burst spectacularly, but Moritz blocked the plan. So PayPal missed out on what could have been massive profits. One backer is quoted in the research saying, "We would have made more money investing than anything we did at PayPal."
Ouch. Okay, then there was the internal power struggle later that year, the coup against Elon Musk.
Yes, September 2000. Key PayPal employees, including Thiel and Levchin, decided Musk had to go as CEO. But to install Thiel, even temporarily, they needed Moritz's blessing from the board.
And Moritz.
The research says he eventually agreed, but crucially, only on an interim basis at first.
Which must have been awkward for Thiel.
Yeah, extremely. The research calls it the humiliating position of having to search for his own replacement, even though he wasn't even sure he wanted the CEO job long term. Moritz only fully backed Thiel for the permanent job after the leading outside candidate actually recommended Thiel for the role. And the analysis points out, for someone like Thiel, who apparently has a talent for holding a grudge, that whole experience really stuck with him, aggravated him.
Okay, and one more clash. The debate over selling PayPal to eBay.
Right. In 2001, eBay comes in with a $300 million offer. Thiel thought, okay, solid offer, let's take it. But Moritz pushed back hard, wanted to hold out for more. He apparently dismissed Thiel as just the hedge fund guy who wanted a quick cash out.
And Moritz managed to convince Levchin to wait.
He did. And, financially, that turned out to be absolutely the right call for everyone at PayPal.
Because eBay came back with a much bigger offer.
A much bigger, $1.5 billion eventually, 5 times the original offer, made the whole PayPal mafia incredibly wealthy. So yeah, in that specific instance, Moritz's advice led to a way bigger payday.
But even with that financial win, the research doesn't just treat these clashes as like ancient history. It frames them as the first act in an ongoing battle. It suggests these deep personal dynamics, these disagreements. They weren't just isolated incidents. They were formative. They shaped Thiel's thinking, his approach, and ultimately maybe even the DNA of Founders Fund itself years later. Personal history playing a big role.
Definitely. It adds this crucial layer of, personal context to the strategic moves and the rivalries that were shaping the Valley back then.
So, okay, even with all this drama playing out at PayPal, Thiel didn't stop focusing on investing in the markets.
Not at all. The research mentions that even while he was deep in the PayPal trenches, he and Howery were still running Thiel Capital International, part-time, nights and weekends kind of thing. They were investing across different asset classes, stocks, debt, currencies, but also, significantly, making these early-stage angel investments on the side.
And were those angel investments successful? Does the research mention specifics?
It does. Ironport Systems is highlighted as a particularly good early bet. Founded 2002, email security company. Cisco bought it in 2007 for $830 million.
Nice return.
Very nice.
And then, after the PayPal sale finally closed, Thiel launched Clarium Capital.
That's right, 2002. That was his big move into macro hedge fund territory. The research describes his goal there as pursuing a systemic view of the world, kind of drawing comparisons to George Soros. It fit Thiel's style, thinking big, global, often contrarian trends.
And Clarium took off pretty quickly.
Yeah, huge success early on. In just 3 years, Clarium apparently grew from $10 million to $1.1 billion in assets under management. The research cites some really impressive returns, too, like 65.6% in 2003, 57.1% in 2005.
Okay, so picture this. Thiel's got this booming macro hedge fund, Clarium, and meanwhile, he and Howery have this quiet, part-time angel investing thing going on that's also generating really good returns.
Exactly. Howery's quoted looking back at that part-time angel track record. They were seeing IRR's internal rates of return in the high double digits in the 60% to 70% range.
Wow, part-time.
Yeah. So that sparked the obvious question, what if we formalize this? What if we actually created a dedicated fund around this early stage approach?
And that's the moment, the actual genesis of Founders Fund. But okay, even with the PayPal success story, Thiel's growing wealth, raising that first fund, the $50 million Fund 1, initially called Clarium Ventures, it wasn't easy.
No, the research describes it as super hard, much harder than I would have expected, according to Howery. It seems the big institutional investors, the endowments and pension funds, they just weren't interested in such a small fund back then.
Really? Even with their track record?
Apparently so. The analysis specifically mentions Stanford's endowment, for example, looking at it, but ultimately passing because the fund size was just too small for them.
So how did they pull it off? How did they actually raise the $50 million?
Well, they only managed to bring in $12 million in external money, and that was all from individual LPs, high net worth people, not institutions.
Okay, so where did the rest come from?
Peter Thiel. To hit the $50 million target, Thiel himself had to write a check for a massive $38 million.
Wow, that's 76% of the fund.
Exactly, 76%. It's
Yeah.
a staggering level of personal commitment right at the start.
Yeah.
There's a quote from Howery that really sums up the dynamic at launch. The rough split was that Peter put up most of the money and I was doing most of the work. Which makes sense, right? Thiel was still heavily focused on Clarium and his other activities. That division of labor was pretty essential to just get the fund launched.
So here we are. We've kind of walked through the whole foundational story of Founders Fund, drawing all these insights directly from this incredibly detailed research.
Yeah, we've touched on Peter Thiel's unique foresight, his really wide-reaching influence. We looked at the firm's just extraordinary performance driven by that core wanting differently philosophy. And we explored those powerful, almost magnetic personal connections that brought that initial founding team together.
And crucially, we've seen how these deep-seated early conflicts, the personal dynamics especially, that really complex rivalry with Michael Moritz, how they weren't just, footnotes. They played a significant formative role in the firm's origins, all culminating in that challenging but ultimately determined launch of Fund 1, backed mostly by Thiel's own cash and conviction.
It's a story that's definitely packed with some unexpected details and hopefully some clear insights for you, the listener. You've basically gotten a shortcut to understanding the real origins of this hugely influential Silicon Valley institution, pulled straight from this deep analysis.
And maybe it leaves you with this thought to chew on, based on everything we've discussed.
Yeah.
Given how central these really intense personal connections were, these strong personalities clashing, the early conflicts, and this defining willingness to just ignore conventional wisdom. Ignore advice from literally everyone around them. What does that suggest about what it actually takes to build these truly outlier institutions, especially in a field like venture capital?
Right. Can you ever really separate that kind of phenomenal performance from the unique, often difficult personalities involved? Or are they just, fundamentally intertwined when you're trying to create something genuinely different and groundbreaking?